Welcome to the Law in the Streets. Today we're shooting our second video since the channel, and our second video is on the subject of board exam, the attorney's admission exam. Now, this is paper 2 of the examination. I know this exam can be very frustrating. This exam can be very demanding. But here are some of the common mistakes that I've identified and are the mistakes that I've seen that they cost people a lot in this exam. They can make you fail the exam. They can make you lose a lot of marks on a lot of questions. Now, this exam is mostly covered with L&D, liquidation and distribution account, and it takes a lesser part of the theory. Now, the L&D either comes for 59 marks or it comes for 63 marks, and it means each and every person who's writing this exam must get it right to make it in this exam. The theory alone is not enough to give you a pass mark. But what then should one do to pass the L&D question? Now, here are some of the common mistakes that I've identified that cost people a lot, that cost people failing the L&D question. I know writing this exam can be very demanding, especially on estate duty addendum, forgetting some of the items, forgetting some of the amounts that have to be put there. But there's always the beginning of this problem, and the beginning of this problem is failure to acknowledge these common mistakes that I'm going to deal with. Let's check it out. The first mistake that I've identified, and the first mistake that colleagues or candidates do, is ignoring registration of executor as VAT vendor. Now, what does this mean? This means that each and every fee that you give, or each and every fee that accrues to the executor, must include VAT. Once you miss this on the part of the question, it means now each and every amount that you're going to put as an amount that accrues to the executor will be an amount that is insufficient and thereby prejudicing your numbers. Now, the current VAT rate is 15%. Now, VAT at 15% should follow every fee that the executor is entitled to. Now, this includes the executor's fee at 3.5% and also includes the executor's fee at 6% for the income and after the date of death. Now, an example here is as follows. 3.5% times 3 million rands is 105,000. Now, 15% thereon of this amount, 15% times 105,000 is equals to 15,750. Now, let's say you are 3.5 on 3 million total assets is 105,000 rands. If you put this amount as the executor's fee only without VAT, it means this amount will definitely prejudice your numbers because VAT is not included. In your calculations, you must then include VAT. When you include VAT, the total amount will be 120,750. This will be the executor's fee because it will be including the VAT at 15% thereon. Which VAT is this? This is the VAT of the amount of 105,000, which the executor is entitled to on 3 million rands being the total assets. Now, let's look at the appearance in the L&D. The appearance in the L&D will say executor's remuneration. This is in the box where you record your items, and you will show that it's 105,000 rands, that is the executor's remuneration, plus VAT at 15% thereon, which is 15,750. And where you record your amounts, you'll put the total of this amount. Now, this is the mistake that most people miss. This is the mistake that when you are writing an exam, while you are writing faster, you realize at a later stage that you did not calculate or add the VAT on the executor's fee, and then that will be too late. Let's go to the second mistake. The second mistake is failure to record assets properly. If you want to get this right, you must always use what we call the DVD rule. Just look at this extract that I've taken from the lead notes for Wilson Estates. It says the first thing that you must do is describe, B, put the valuation of the property or the asset. C, the divestment note. The divestment note must always tell who is receiving that asset. Is it an asset that has been cashed to fall into the estate bank account, or is it an asset that has been awarded to somebody else? Now let us look at this example extract. This extract says ERF 114 being portion of the remainder of ERF 713 Constantia Cape. Registration Division Cape Town. Measuring 1.5 square meters, 1,500 square meters. Held under deed of transfer number T3872/75, dated 24 March 1975. Now this is the description. The second part says at appraised value. This will be the value that the property in the question they say is valued at this much. That is the valuation. That's number B. The C, the divestment note. Who is entitled to this property? Is it in terms of the will? Is it in terms of the interstate succession rules? Or has it been sold? What is happening? That is what the divestment note must tell. Always remember, it is the DVD rule. DVD rule. You'll always get it right when you describe the assets. Now, number 3. Let us look at number 3. Number 3 is the failure to distinguish policies to be recorded in the L&D account. That is the mistake that most people do. Let us look at the first policy. This is a life insurance policy on life of deceased taken out by the deceased. So it is a life policy on the life of the deceased taken out by the deceased. What do we do with this one? 3.1, the first one. With a nominated beneficiary, another person and not the estate as nominated beneficiary. What do you do with this policy? You must exclude this policy because it was paid directly to a beneficiary. But you must include it under the Estate Duty Addendum owing to Section 3, Subsection 3 of the Estate Duty Act. 3.2. Then there is a life policy that does not have a beneficiary. You then have to include this policy by its maturity value as claims in favor of the estate. Now, there are two ways in which some people draft the L&D account. Some people include these policies under movable assets, but some people do a heading of claims in favor of the estate. This is where you include this policy. Now, number 3. This is a policy that is used to pay off a debt. So, what do we do about this policy? You must include this policy by its maturity value in the claims in favor of the estate column. This is the mistake that people do. They will say the policy was used to pay a debt at a particular amount. Then we have the remaining balance. Then the person will record the remaining balance in the claims in favor of the estate. And they go again in the liabilities and deduct the policy twice. That amounts to dual deduction, and it will cost you. It will not, your L&D will not balance. So what do we do with this policy? Include maturity value in the claims in favor of the estate column, then less the debt amount in the liabilities under claims against the estate. To note, do not record the amount as already deducted in the claims in favor of the estate, and later do another deduction in the claims against the estate. This will amount to dual deduction of the debt. As I was saying, e.g., policy has a maturity value of 100,000 and settles a loan of 10,000. Executor receives 90,000. How are you supposed to record it? Now, this is how you are supposed to record it. Life policy, 100,000 at maturity value. You see it there. Then, it will be in the claims in favor of the estate column. Now, that loan is a loan, a debt of 10,000. It will be in claims against the estate. So you see there, we did not record 90,000. We recorded 100,000. Why? Because the deduction is going to happen in the liabilities column. The other policy is a policy on life of deceased taken out by another person. So this policy, you exclude it in the L&D. Then there is a life insurance policy taken out by the deceased on life of another. What do? Now, this is where the surrender value comes in. You record surrender value under claims in favor of the estate column. But if policy was reduced to cash, your divestment note, you remember the DVD, the divestment note must direct these funds to an estate bank account. But if ceded, it must be awarded accordingly. Then you will show that it has been sent or transferred to the cessionary. Now, mistake number 4. Failure to calculate master's fee in terms of directive published in the Government Gazette on 3 November 2017 and which became effective on 1 January 2018. Now, this is the most common, but some people miss it because they practice old question papers and they forget the new rules. Let's look at what this directive says. Between 250,000 and 400, the fee will be 600. And from there onwards, a further 200 rands will be levied for every 100,000 rands of estate value up to a maximum fee of 7,000, which will be reached at an estate value of 3.6 million. See, I've added a website there where they also explain this. This is where I've extracted this explanation better. But as you can see, underneath I've put something there. It says step 1. 1,500,000. This is an amount which you are calculating the master's fee on, being 1.5 million. So, because they said the first 400,000 between 250 and 400,000, we have 600. So here we're going to say step 1, 1.5 million less 400,000, we are left with 1.1 million. So 600 is payable on the first maximum amount of 400,000. We put it aside. All these calculations, you'll be doing it on your scrap paper. Then step 2, 1.1 million divided by 100,000. We have 11. You must always ignore the decimal. If it has a decimal, you must always ignore it. Now we have 11. Then we're going to say step 3, 200 rands on each 100,000. So it will be 200 rands times 11. What is this 11 for? Is the 100,000 that are remaining in our 1.1 million. So we have a total of 2,200 rands. Now step 4, this is the final amount. Your final amount is going to be 2,200 rands plus 600 is equals to 2,800 rand. So the master's fee that is payable and that is to be recorded in your L&D is 2,800 rands. If the master's fee is 10,000, the directive says the maximum is 7,000, meaning you shall record 7,000 being the latter amount. I hope it makes sense. Then mistake number 5, this is the last mistake. It's on shares. Mostly people underestimate shares, but people miss this calculation. Now, shares approved valuation is 100 rands, but they are sold for 120. Record 120 in the L&D account, but make an adjustment in the estate duty addenda by deducting 20 rands. Why? Because shares were sold more than their valuation. But if sold less than the valuation, record the amount sold for and add the difference in the amount sold for and the one valued for. If valued for 100 rands but sold for 80 rands, add in the estate duty addendum 20 rand for adjustment. Then a common mistake when people are calculating shares, this is what they do. Look at this example scenario of realized shares. 1,800 ordinary shares in ABC Platinum sold by stockbroker at 1,950 cents per share. Now, how do we calculate this? Look at this step. 1,800 shares times 1,950 cents is going to give us 3,510,000 rands. Do not record this amount. What do? Then you're going to say 3,510,000 divided by 100. Then it's going to give you 35,100. Then you record this amount. You must do the above calculations on your scrap paper. If you record 3.510 million, you are going to lose all the calculations and it's going to cost you. So you must always remember, where there are cents, you must divide that amount that you get from multiplying the number of shares with those cents. You must divide that amount by 100. Now, these are the most common things that are very troublesome in this paper, especially taking into account that this paper, 2 hours is not enough for this paper. You need to write fast and faster. Now, these are some of the mistakes that people do, and these are the mistakes that cost people a lot, and these are the mistakes that make people to write this paper again and again. I encourage people to practice the 2018 question paper, to practice also the reason why I say 2018 is because it is a question paper that was written when the master's directive regarding the master's fee was published. And I also encourage people to practice estate duty addendum so that you are not slow on the estate duty addendum. Practice the formulas, try to summarize them as you can manage them, and most importantly on theory, learn how to deal with the joint wills, learn how to deal with the massing of estate, learn how to deal with addition certificates, how to draft them, how to draft letters, and the processes of this administration of estates insofar as lodging documents with the master is concerned. I advise people to start also with the L&D account, because if you start with the L&D account and you're covered up until the income and expenditure account and you are left with 30 minutes, you can rush to theory. Then you find that side you have close to 50 already, or 45. You go to theory, you get another 10 marks and all that. You must just work to ensure that you manage your time very well, because time will be really moving fast and you'll be waiting to write the other paper in the afternoon. Other than that, I wish you nothing but the best. Thank you for watching Law in the Streets.